Hello, good people. We are back for another episode of the Tech Behind FinTech. Joining me today is our returning guest, Chiagozie Iwu. It's my friend. I'm happy we connected on the show. He came on as a guest, and he's been a returning guest on all things crypto and blockchain. Welcome to the show, Chiagozie.
Lovely to be here once more. Always lovely to be here.
Oh man, look, you are definitely planted in. So you're one of the frequent guests that I always like having on. And even though I know you, some of the new audience members tuning in may not. So on that
All
note,
right.
let me read your wonderful bio. Chiagozie Iwu is the founder and CEO of CI Cryptosolutions, a company that owns and operates the Niger Crypto Exchange, Niger Pay IO, payment gateway, as well as developing blockchain solutions and consulting for other firms. He is a seasoned blockchain enthusiast and possesses ample experience formulating derivative contracts as well as portfolio structuring in both cryptocurrency and traditional markets. He has also created a cryptocurrency index called the Bar WI30, which focuses on tailoring the index to cryptocurrency market characteristics and risk. He is a certified blockchain and finance expert with core focus on the financial applications of blockchain technology. Wonderful to have you here once again.
Thanks a lot. Thanks a lot for having me. Always a pleasure.
So you know the format of the show. Today's topic: can your CEO be automated? Decentralized autonomous organization. So obviously, can your CEO be automated was a play on words to get you to tune in. So, but we're going to be talking about decentralized autonomous organizations that exist without any human and staff. We're going to break it down. What does it mean? Different use cases, and also the history and some current events. Before we get into the topic of the day, as you know how we do on this show, we cover some news topics. So it's not an extensive list of news topics, but we will cover two really around. We're going to cover one about Coinbase, and we're going to talk about the happenings in Nigeria regarding the central bank. Um, Chigozi, can you let the people know where are you located right now?
Okay, I'm currently in Lagos, Nigeria.
So we are international, and we always love our international guests, especially those from Nigeria. You could tell by my name, that's where my family originates from. So I'm always happy to have a fellow Nigerian on as a guest, especially when they are tuning in directly from the country. So on that note, let's jump into the news topics of the day. Let me add this in. Okay, so the first topic of the day: Coinbase. Some negative news, actually. Um, One of a shareholder by the name of Donald Ramsey, along with a law firm, Scott and Scott, in the California district, they have filed a class action suit against Coinbase. Also their VCs and so forth. So what they're saying is, at the time of the offering, the company required a sizable cash injection. The company's platform was susceptible to service-related level disruptions, which were increasingly likely to occur as the company scaled its services to a larger user base. Citing events in mid-May when Coinbase conceded it needed to raise funds and announced plans to raise 1.2 billion through a convertible bond sale, Ramsey emphasizes that the company's stock sharply declined by close to 10% over two trading sessions. Quoted right here: investors were also likely surprised by the timing of the issue, meaning the bond issue, considering that Coinbase just went public in mid-April via direct listing, which doesn't involve issuing new shares or raising capital, signaling that it didn't require cash. So the company's decision to issue bonds a little over a month later is likely raising some questions. Yeah, let's jump into it. I remember the excitement when Coinbase went public, and it came out extremely high, and then I think at the time Bitcoin took a hit as well
Yeah.
from like 60. It hit 60, close to 65,000, and all of a sudden the Coinbase shares dropped. um in our previous episodes, we went over SPAC deals. We went over different. I forget which episode number, but it was like a few episodes ago, and we talked about the different types of listings. So definitely revert to look back. So they went into a direct listing. Now what we're seeing is this class action lawsuit. Want to get your thoughts on that?
Yeah. Okay. So there are two things involved, right? There are two things involved. Like Coinbase. Now, running an exchange. I run an exchange, right? Of course, not to the scale of Coinbase, but running an exchange, there are a lot of dynamics.
One day it will be, though. One day it will
Yeah,
be.
of course, definitely.
I
If
love
not
that.
bigger, of course. So, but the thing is that running an exchange, there are a lot of dynamics, right? There are a lot of, believe me, right? Before the advent of cryptocurrencies, right? When it comes to the exchanges, right? It's only kept to like the government, like the large institutions, like the New York Stock Exchange and the others, right? And every other person that played on the lower scale were broker dealers, right? But cryptocurrencies, we have lots of exchanges. We have more exchanges than actually broker dealers, right? And running an exchange is an ecosystem of its own. There is a lot that cannot be foretold. There is a lot, especially when you are increasing in size. Like I had scaling issues when when we had an overnight increase in size. Like we had like about 20,000 users all at once. Like it was a shock to us. Like it was a server shock. So basically, Coinbase might not have analyzed the fact that their IPO their IPO would also be a marketing um, will also be a marketing point for them, and of course their skill might have increased, and there might have been technological challenges that came in, and there might be a lot of challenges in terms of scaling that came in that needs quick injection of cash. Meanwhile, on the other side, I understand why the investors and other shareholders are skeptical, are not happy with this, right? It's never good when a business you just bought, like you priced in, you had an IP, you priced in, you bought at this particular price, and all of a sudden they're increasing their liability base all of a sudden, right? Which is not what was forecasted. I'm sure that all the forecasters gave a liability free like first 3 to 4, 5 years, right? And all of a sudden the liability base is increasing, right? Of course, that's gonna dump share prices, right? So of course it's understandable, right? There is something that is happening that has not been revealed. It will be good if Coinbase reveals this without a lawsuit, right? Because it's totally understandable. Honesty to your equity holders is very, very important in any business. So I see the two sides of the coin, and I understand. I wouldn't say I understand, but I think I can perceive what Coinbase might be going through in that sense.
I mean, anytime you have situations like this where there's a class action suit, I always find it funny because I think I got like a letter. I don't forget which company. I don't really want to mention them, but I got a compensation of like $5 because they were part of a class action suit. So the people who really make money in these are the law firm because they actually get the bulk of it.
Yeah,
The thousands or hundreds of thousands of people that get their whatever prices they don't sometimes make out in these class action suits. So it'll be interesting to see where those goes because our topic is around blockchain related topics today. I wanted to bring this news article up, but let me got a message from one of our audience members. LinkedIn user Gems, thank you very much. I'm looking on that's a good connection of mine, Roger Davis. Appreciate you tuning in. Thank you very much. Let's move on to the next articles, and then after that, we'll jump into our topic of the day, which is decentralized organizations. So, Nigeria to pilot central bank digital currency in October. For much of 2021, the Central Bank of Nigeria, CBN, has been in the headlines for its anti-cryptocurrency measures. Yet, the institution has this week redoubled its investment and research into crypto's underlying technology, blockchain, and has set a clear date for the pilot scheme of its blockchain-powered central bank. According to on October 1st, they're going to launch a pilot scheme for Giant, a CBC project in development, and so basically central bank digital currency. The director of technology said the bank might conduct a proof of concept before the end of 2021. Before I move on, alongside the CBN, the Bank of Ghana has this summer been moving rapidly towards the pilot stage for its own central bank digital currency. The country has positioned itself as a pioneer in CBDC development on the continent, considers central bank issued digital currencies to be superior to and less risky. So let's see some of the benefits of going with this the digital currency, ranging from higher efficiency for payments and remittances, better monetary policy transmission, improved tax revenue collection, and the facilitation of targeted social policy. So I'm gonna laugh because I know when I had you on previously, we were talking about the central bank and having crypto transactions going into bank accounts. That was a previous episode. If you missed that episode, definitely go in our catalog and check that out. It was a very interesting discussion. Being obviously you are in the business of crypto, you're head of an exchange. You obviously do tremendous amounts of business in Nigeria, and I know you have your own concerns with the central bank and how it left everyone scrambling when they put a ban on cryptos going into bank accounts. What are your thoughts? I want to kind of dive into this.
Oh wow! when I saw you raise this up, right, it was really, believe me, I couldn't hold myself from laughing, right? Because okay, yeah, the central bank has been in this for a while, right? They announced this immediately after their ban on other crypto on exchanges having access to bank accounts. Okay, so there are two things to this. Yes, there is the aspect that yes, it's cool that the CBN is actually looking at this. I believe that every central bank will have a digital version of its currency within the next 10 years. I think is something that is very, very necessary and is not something that is a big deal because what we have here is just stable coins run by governments. I don't see it as anything more than that, right? It's just stable coin run by the government, right? So basically, in the case of the central bank, right, I was in a meeting yesterday because they invited the industry stakeholders. They presented it to us basically before rolling out this news, right? So we got to ask a lot of questions. We got to engage with the central bankers. So basically, yes, there is the good side to it that they are experiencing it. But sincerely, from the presentations done, from what they've talked about, I have not seen much difference between this, right? When it comes to the actual impact it's going to make on the economy between this and the normal traditional online banking. Right. Now, cryptocurrencies have a unique feature to it, right? Many of them are on permissionless blockchains, right? Permissionless blockchains, open immutable ledgers, right? And usually, and in many cases, of course, this is not always the case, right? Those don't have any central control. Now, right, I do not see, now that is an innovation in itself, right? We're going to be talking about DAOs today, right? And you see that the decentralization is an innovation that actually makes blockchain unique, that actually makes cryptocurrencies unique assets, right? So in this case, right, it's just centralized e-currency. So I do not see the difference between having my normal banking app, right? My normal online mobile banking app, right? And using it, and also having these digital wallets that would hold the e-naira, right? If they claim it's going to bring in financial inclusion, right? The truth is, those people that could not access their online banking with their banks, right? There is no way they could also access the wallet. It needs internet connectivity.
It's a digital divide, right? So in one aspect, it will make things easier for those who have access to mobile devices, can manage their online, their wallets and so forth. But in another aspect, those that deal in 100% cash-based transactions, which, you know, obviously we've been to places and markets, especially in Nigeria, where, you know, it's cash-based. We're not exchanging digital. It's everything in certain places are cash-based. That's going to be a huge difficulty. So I totally agree with you on that. And my concern with that is that digital divide.
Is it what? Sorry, I didn't get that.
No, my concern is the digital divide, right? So those that have the technology versus those that don't and rely 100% on cash-based transactions, especially when you start dealing with rural markets and things of that nature.
Exactly. The claim here is that you may not really need internet connection to use it. Like if you have even a non-internet connected mobile device, you could also transact. There's what we call USSD here in Nigeria, right? Whereby I could send money to you by just sending a code, like I'm making a call, right? It could be star 100 hash, whatever number, right? And I'll type in the account number and the PIN and all that. But as I said, this already exists within the banking sector. All these innovations already exist within the banking sector. So as I said, I do not see the difference with what they're doing and what is existing, right? They already control money supply through the banking sector. They will still control money supply through this with the banks through this app. So I don't see this sincerely.
You know what? I could spend so much time diving into this, and this could be its own show topic. Because it's a lot of things to unpack there. I like what you said. The centralization versus decentralized. I mean, one of the points of, like, you look at Ethereum, you look at a permissionless like blockchain, like Bitcoin. It's not central. It's totally decentralized. In this case, is this digital currency central to a controlling authority? So definitely find that interesting. But let's move on to our show topic. So we had I had some people commenting when I posted. They were very, very excited to understand what this stuff is. I mean, sometimes because we're in the field and part of different I'm part of different research initiatives and different things like that, we see this stuff all the time, so it's almost normal to us. And I take for granted that a lot of people don't know it, because you have constantly every week we're talking about these different topics, and obviously you have your own exchange, so even prior to your exchange you're very passionate about this, so it's normalized to us, this stuff. But in the majority of the cases, this is not normal. So on that said, we're going to get into decentralized autonomous organizations. So let's just get into the textbook's definition, and then we can just really get into it. So a DAO is a decentralized autonomous organization. In short, it's a company that does not have any human managers or staff. Everything that happens in the organization is fully automated and based on open source computer programs known as smart contracts. Let me see something here real quick. And yeah, so that's like the general definition. There's some other points I wanna raise about that. So it's a cooperative that is collectively owned by its members, with rules set and executed through code. DAOs replace centralized management structures with a techno-democratic approach wherein decisions are voted upon by investor stakeholders. DAOs are built on top of blockchains, in a lot of cases Ethereum, and their transactions are visible on the underlying blockchain protocol. While the DAO was an early iteration of DAO governance, decentralized autonomous models remain highly influential in blockchain-related use, particularly around DeFi, which we talked about last week. So, textbook, give me your thoughts on DAOs? Let's get into like the history and things of that nature.
Okay, basically, when it comes to DAOs, right? Like this is something very, very interesting, right? So many people do not know that a lot of companies within the crypto space are actually working with this model, right? They're actually working with this model. They're actually operating this model. Companies like Dash, right? Make a DAO, like a lot of them are operating this model currently, and it's a very successful model, right? But from the day one, it was not, it has its challenges, right? So for those that do not completely understand, let me try and explain it in like the simplest of terms. So now imagine an organization now whereby, right, there is no hierarchical structure, no CEO, no COO. Every decision made in the organization is voted on by stakeholders within the organization. By stakeholders now, it means it could be people that own a certain level of tokens. It could be people that own master nodes. It could be people, like there are different structures, and outcomes are based on smart contracts tied to outcomes, right? Everything is contractual via smart contracts, and stakeholders vote on what is going to happen, right? So that's just basically what a DAO is. There is no centralized structure, and it's a very successful model. One of the first DAOs ever created then was a company called DAO itself, right? Built on the Ethereum protocol. Meanwhile, Ethereum is one of the most popular protocols, for running DAOs because of its ability to actually run smart contracts. So I actually think this is a business model that in the next 15 to 20 years, no, that's far along. In the next 5 to 10 years, we're going to see a lot of major corporations, even corporations that have, let's say, that build, that are not just digital, right? That build hard infrastructure, physical assets, might spring up from this model, right? And might spring up from this particular model, basically. So, yeah.
No, I mean, it's important to note, right? I mean, we can start looking at just some characteristics of it. Let's go. Let me just go on my thing and plug it up. When we start looking at traditional versus a traditional top-down organizations versus a decentralized autonomous organization. So, you know, we all understand that from a top-down, you'll have some level of management, whether it's a CEO, senior management, middle management. You'll have your supervisors, you'll have your staff. In a DAO, totally different from an architectural perspective. As Chiagozie mentioned, right, you have developers and you have this concept called smart contracts, which are essentially like application contracts that run on the blockchain. So it's basically something gets done, something is promised, but it's automatically enforced and done through code. And they have a concept called code is law, meaning that what you write and what you put in and when it executes, that's the governing body. So some of the different aspects of it, right? You have the user, you have a validator. So you have things that are incentivized and voting aspects in which was just mentioned. You have some sort of exchange, things happening. But the whole concept is it's basically all autonomous, and it's the infrastructure itself is being executed on some sort of blockchain. It's being executed automatically and with staff. When decisions are made, those with some sort of stake involved can vote on different decision points. So I just want to get into that. And one article that I read that I found interesting, because I always looked at Bitcoin as a platform, and someone posed was Bitcoin. The Bitcoin network was the first DAO, and it was an interesting perspective. And I want to get your thoughts on that.
Yes, I actually think that the Bitcoin network is really the first DAO, because if you look at the Bitcoin network and how it's evolved over time, right? You could call the Bitcoin network a company. Sincerely, like if you look at present day DAOs, right, and what you had in the Bitcoin network, you could call it a company, right? Whereby major decisions, right, were community driven, right? Miners, in this case now, since it's using a proof of work mechanism, right, the delineation, sort of like the decentralization now is in the hands of sort of like computers, not human beings per se, right? But let us not forget this, right? You also have the consensus protocols, right? Whereby human beings have, whereby people actually need to agree, and that the miners controlling these systems need to agree that this is the way forward. I think one of the biggest example was the most famous Bitcoin fork that happened with Bitcoin Cash, right? When Bitcoin Cash evolved, it was all about a size of block issue. So you had the organization now, the stakeholders within the organization now moved towards a particular angle, right? And all the stakeholders moved. It was a decentralized decision, right? So looking at it from a very simple, let's leave the jargons aside for a while. Looking at it from a very simple perspective, yes, it is an organization that is decentralized, right? So of course, Ethereum improved on a lot of this, right? By creating a lot of intricacies, by creating more layers in decision making, in how things are executed, right? But coming to think of it, Bitcoin is really the first DAO, if you look at it from that.
And it's so interesting because at the time, until researching for the show, I never really considered that. So that was an interesting perspective. And now with the release, we talked about this, I think it was either last week or so, or 2 weeks. Yeah, they're going to release Taproot, which will be a Bitcoin upgrade. And that will introduce in terms of security features, it'll also introduce the concept of smart contracts within Bitcoin. So I think that's supposed to be released at the end of the year. And in the same aspect that Chiagozie was talking now, that decision to upgrade was voted on, and it received, I think, 90% consensus that they want to upgrade. So this was voted on now. Now that's happening. So it's definitely was I'm fascinated by the way it's working, because it's no CEO of the Bitcoin network. It's no senior management. It's a concept of decentralization. Everything's being managed by people who have stake in it, and it's being decisions are made on a consensus basis across the entire board. I mean, so what we were just talking about. So in terms of Ethereum now, just to give some history, the first decentralized autonomous organization, ironically, was called the DAO, and that launched in April 30th, 2016. And what it was an investor-directed venture capitalist firm. And the whole idea was that those with stake in it can then decide on what the DAO would invest in. So it was a very innovative idea at the time, and their whole idea in 28 days they were going to raise. I think they raised about 150 million.
Yes.
Unfortunately, there was some vulnerabilities in the smart contracts. As we said before, it's all run by a series of smart contracts for this autonomous organization, and a threat actor was able to exploit that vulnerability in the smart contract. Hence why nowadays everyone knows before you release a smart contract, auditing is extremely important. And they were able to take about 60 million. So that was a critical decision in this time period, because at the time that represented 14% of the Ethereum's assets under management. I don't know, I could think of a better word, but so the decision was made basically to how do we get those investors back their money, and they forked Ethereum, which was a huge issue, because the whole idea about a blockchain is that it's immutable, so you shouldn't be able to make any changes. So there were tons of disagreement, but because it was so early in the life cycle of Ethereum, and they felt that this decision was important for the survival of the platform, they ended up with the fork. So what we see today in terms of some people may have ETH, that is a result of the fork. And there's still an Ethereum Classic, which is the original, the total original, which some users tend to be on. And ironically, the actual threat actor threatened to sue the entire network, because they felt, the whole idea is code is law. So they felt, well, listen, you put the code, it was vulnerable, I exploited it, but code is law. I should be able to take some of that. You shouldn't take my money back. So very interesting stuff. And what they studied, and in doing some research, they stayed on Ethereum Classic, and I think the money that they or the tokens that they got was worth 8.5 mil. I don't know if they were able to extract that money afterwards, but so that's like a huge history point in Ethereum and that fork. What are your thoughts on that?
Okay, yes. Basically, the situation with the DAO, right? It was multifaceted, right? I remember that period. Vitalik did not have so many friends within the Ethereum community. Like it was crazy per se, right? But it was actually the first test of an actually decentralized organization, right? It was actually the first test, right? And of course, there were exploits, right? But there are aspects of the DAO that have been lessons have been learned, and there are aspects that have been being implemented even till today. So what am I talking about? Now you had a situation whereby it was all venture capital, where people can put up their proposals, curators analyze these proposals, and then stakeholders within the DAO, that's the investors within the DAO, now get this right. But there were it is a perfect model, right? So the vulnerability here now was on the tech side. We've had DAOs that also fail on the model, right? A good example being Augur. I don't know if people remember that project. I think they launched a version 2 recently, whereby Augur was supposed to be like a decentralized organization where anyone can bet on anything, right? I could create any bet. It could be sports betting. It could be actual betting of real things like human activities, right? So where the model became flawed was when people started doing things like putting assassination hits. I could get this person. I could say, I bet this guy will be dead in the next 1 week, and things like that. So the model they had to close. They had to close down. So there was a flaw in the model, but the code was flawless, right? So this one, the model was perfect, but there was a flaw in the code. So more recently, smart contracts faced like series and series of audits, right? Series. It's not like the DAO was not audited, but the audit was not thorough. There were just maybe one or two audits, right? Now you face series and series of audits to make sure such exploits do not occur. And if such exploits occur, right, it can be plugged. Ethereum fucking out this particular the Ethereum community voting of doing a fork of Ethereum because of this hack is a product of decentralization. It's still decentralized. It was still done by stakeholders. It's still a product of decentralization. And when such problems occur, the community can still vote and plug those bugs. So bugs does not mean that yes, this is over, right? Things can be plugged and improved upon. And believe me, there are a lot of models working today, even within the Ethereum community, right? And a lot of cases, we have the case of Maker, and there are a lot of them, right? And even the Augur that I just talked about, I think they've launched a second version. I'm not so sure of that, but I need to check that out. So basically, it is a very cool model, and it is a model that is going to take root within a lot of crypto communities. A lot of centralization, even centralized exchanges, right, are beginning to have so many elements of decentralization. Our exchange is becoming fiat decentralized. Binance is becoming fiat decentralized due to regulatory attacks, right? So to make something come. In fact, one of the reasons DAO even is not existing today is not because of the hack. It's because of decisions later taken by the SEC to classify that yes, that the issue of the DAO tokens was a security raise, right?
Oh, interesting.
So you understand? So basically, moving forward, a lot of people took that into consideration to properly decentralize it in such a manner that, like, even governments have no effect, which is the whole idea. A lot of governments, especially the US government, and there's this argument about whether we should classify DAOs as actual organizations, as even LLCs, basically, and regulate it like we're regulating the normal C corp or the LLC and other forms of organization. And that has not taken Wyoming. I think Wyoming did something.
Yeah, I was gonna get into that. Like, so we talked about this on this show when the article came out. I get my shows mixed up, but the history is definitely there. Wyoming is the first state to legally, or the first in the U.S. to approve and legally recognize a decentralized autonomous organization. It became official when the American Cryto Fed DAO received notice from the Wyoming Secretary of State's office that it has been acknowledged as a legal business entity. I think this is going to be a huge precedent. So essentially, everything that we just talked about prior, it wasn't recognized. Wyoming is the first state to actually legally recognize. And when I talked about this a few weeks ago, it might have been the first in the world, not just
Yeah.
I think it was like to legally recognize
Nice,
that.
of course.
So and just to get a high level overview of the American Crypto Fed, they basically have the currency that is a stable coin called the Ducat, and they have another currency, LOCK, which if you buy LOCK, you could get voting rights within the crypto Fed, and their whole idea is to shield against inflation and deflation for this type of stable coin. And in just looking at it on a high level screen grab that I got from there, I don't want to spend too much time on it, but I think it was important to talk about because they are the first to be legally recognized. So I just want to understand exactly what they're about. And interesting architecture they have with the lock. They have obviously same concept. They have smart contracts They have their rules and their policy. Like I said, the lock, that will give you the voting rights and so forth. If you get this, it's important to note, if you do want to own lock, you have to apply by the KYC and AML. So if you are an individual that you're or in a participating bank or in a compliant crypto exchange like Coinbase, where they do check for all of that, then you're able to acquire a lock and have the certain voting rights in the future of the Cryto Fed. So interesting. I haven't heard of them prior to this Wyoming law, but I definitely find it interesting. What are your thoughts?
Yeah, I think this model is similar to the
Oh
DAI
yeah.
stable coin. Yeah, it seems a bit similar, like a different token for the voting rights, and then the actual stable coin, and then control per se. D is actually a very interesting concept, right? I think it's based on some a methodology proposed by Hayek, a famous economist called Hayek, right? So, but it's actually a very interesting model. I wouldn't say it's a perfect model because that control is still there, and who would unlock? I don't know who will own the bulk of the lock. That's a question that still needs to be answered. Maybe we need to do more research on that. But
Yeah.
if it's based on what DAI has already done, and it seems to be a similar model, it's a very cool model, and I think this is I think this is a model that the central banks would be better perfecting, right? Would be better to implement than the current centralized model, which we're already bringing from traditional markets into the CBDC, basically. So I think this is the model they should look into going forward in the future.
No, that's a good point. I mean, it looks like, and this is just my opinion, it looks like obviously they see that digital currency is here to stay. It's going in a certain direction, and I think they just want to be part of it. I'm not sure that necessarily they are thinking through the whole decentralized model. I just think it's like, you know what?
Yeah.
We just want to get ahead of this so we're not left out of the game. And I think that's what a lot of the governments are doing right now because of just the impact of when you start looking at digital currency and where things are going, right? It's like you don't want to be left out of the conversation. So to your point, can the model be improved of what they're doing and thought through? I just think it's going to be a rush to just get ahead of the tech. Like it's so innovative. So that rush is there. It's like, okay, how do we become part of this? And from looking at it overall, governments with technology tend to move a little bit slower than the private sector. So interesting stuff. And one of the last is just a couple of interesting use cases. You could easily find this on Wiki. I just wanted to go over some use cases that are currently out there right now. So obviously we talked about Dash because that's an actual cryptocurrency, and they're a decentralized autonomous organization. Augur, you mentioned that, right? Was that the one that you were talking about with the prediction market?
I've got.
So they're on July. They launched July 18th. Steam, data distribution, social media, name services, March 2016. They seem to be operational still. Honey DAO, I went on their site. It seemed interesting. You can seek venture capital from them, but you have to submit your pros, a whole different stage that you have to go through in order to do that. Make a DAO, lending of stablecoin infrastructure. So I mean, it's definitely some interesting developments in terms of when you're looking at this market. And I think in terms of slides, that is it. Let me remove this, and let's just talk through it. Like I saw some it was an interesting article that I read about combining AI and decentralized organizations. Matter of fact, I'm gonna post the article so if others want to see it, and it's just like where's the future going with this? And I don't know, for some reason posted it here. I don't know if it'll post on LinkedIn, but I'll post on LinkedIn afterwards if you're not seeing it on LinkedIn. but it should post on Twitch and YouTube. I just posted the articles for everyone, and essentially it was saying that the goal of the DAO is to create an organization that can function without human hierarchical. In theory, the interaction between humans and organization can be expressed as a contract. And they said the AI aspect of the AI DAO can be related to independent agents that autonomously take decisions. So just very, very interesting combine those technology. I mean, they definitely have to like dive into it. But anything now you throw AI in front of it, it adds a whole flair to it. But in coming across it, I just said, okay, this is something I kind of have to like dive deeper into. But for the last few minutes of the show, I just want to just really dive into the future of it. I mean, I heard about this vending machine concept, right? Let's say a vending machine was a DAO, right? And it's completely autonomous. It's everything is running in an automated fashion. When it runs out of supplies, it'll have sensors that can send out information to a contractor to refill it. It could have sensors on their maintenance, right? So when different things need to be upgraded, other contractors come, and then things can be adjusted. You could have voting privileges on which snacks they want to include. I mean, it could just run as a fully autonomous business, right? The money that comes in is paid in a digital currency, and then it gets loaded and distributed in, right? Part of those funds go to the upkeep. Some get distributed to maybe some of the holders and back to the business. So, hypothetical example, but I just want to get your take on that concept, on the different use cases of where this stuff can lead.
Yeah, like you said, the use cases are going to be enormous, right? That goes beyond the financial sector to even hard sector, like what you just gave an example with the vending machine, right? So, yes, the primary place where the use case is going to be massive, of course, is still going to remain finance, right? It's still going to be remain finance and how resource distribution, because I think decentralization will do a lot when it comes to reducing income inequality per se, because when you have more people included in financial market participation, you're going to reduce income inequality. But yes, integrating with AI is another ball game altogether, because I have some skepticism towards that, right? Because you don't want to remove the human elements from this, right? Remember the example I gave with Admiral. AUGUR, yeah. Remember the example I gave, right? You don't want to remove the human element and the human regulatory element from something completely, right? A lot of smart contracts, right, have bugs. Have bugs because you still need the activity of curators, right? Of course, some people argue it's a bug, some people argue it's not, right? But so we see that's a bug, that you still need the activity of curators, which are human beings, to actually notify whether an event is an event is false or negative or positive, to know whether, okay, in the case of the DAO visits, curators accept vet an application before sending it in for voting. In the case of many smart contracts, right, when an outcome, when there is a duplicity of outcome, you still need curators to vote and say this is the actual outcome that has been filled. Now AI can come in and say no. AI can come in and tell you and innovate on itself and tell you this is the outcome, instead of the human curators telling you this is the outcome. Now, the danger in that is that AI innovates based on algorithmic perception, right? So it could lose the human element to it, and of course, there is a lot of moral backlog there. I don't know the best way to explain this, right?
No, it's perfect. Like what you brought up with Augur, right? I mean, it's a betting platform, but who knew you're gonna like? Technically, you could place bets on anything, but the majority of human beings are not going to place a bet on someone getting assassinated. But functionally, you can. So then you have some outliers who start taking on that. Start exercising that use case. Morally, obviously, is reprehensible, but you have a situation where now people are betting on assassinations or or betting if a sports player is going to get injured, or just these random bets. And if you create the market for it and somebody's willing to take it on, and it's decentralized with no one saying, you know what, let's not do this, right? People were like, okay, you know what, I'll put a stake on that. I don't think it's going to happen. And then it just, you go down this crazy rabbit hole. No, until in full transparency, until actually prepping for this show, and every show that I get into, I prep, I get some articles and just read through it to just add to the conversation. I didn't come across this AI decentralized autonomous organization. I'm just really just still, I'm not even there yet, to be honest. I'm just still fascinated with the DAO in general, more for financial applications. I thought the vending machine scenario was very interesting, because then once you start thinking along those lines, it can just start, could start going off the rails on just various things. Anything where, I mean, and when you really think about it, right, this last year when everybody was locked down and at home, everything was just total digital Zoom. It's just so many use cases. Now you can start really thinking about DAOs and how something can just run autonomously, as long as, something is deposited and an action is carried out and we can validate it, it can happen. So, one of those things, man. Like I said, I'm still wrapping my head around certain things, and I'm just blown away by it. So that's where I'm at. I didn't even add in the AI piece yet. Listen, if you're tuning in, definitely post a comment or two. You have any questions, comments before we end off the show? It'd be really good to hear your thoughts on what you think about everything, especially if you have experience in the subject. And if you don't have, just post a comment. What are your thoughts? Definitely always interesting to hear that. But yeah, man. So in before we wrap up, what's going on with Niger Crypto? Talk to me about that.
Oh, Niger Crypto, right? The last few weeks has been crazy, right? It's been one new thing to the other, right? So basically, we're talking about DAOs. We partner with one of the biggest DAOs, which is Dash, right?
Oh,
If not the biggest, right? So we partnered with them to open up a fiat to crypto ramp in Haiti. So what we just did a fiat to Dash ramp and a fiat to BUSD ramp in Haiti, which is currently working. We've had about 3,000 strong so far. And the major target market there is the remittance market from Haiti to America. A lot of Haitians have a diaspora in America, right? And want to send money back home. So it's an easy way for them. Like all they need to do is to buy Dash and send to their loved ones, who can easily change it to cash on Niger Crypto.
And I'm sure that tremendously is a lot cheaper than going through the traditional Western Union wire routes and things of that nature. In terms of, I have a lot of Haitian Americans, and my neighbors I grew up with, the next door family from Haiti, and definitely a lot of close connects there. In terms of percentage, how much cheaper? 50%, just to give people a general ballpark.
It's okay.
70, 80, 90% cheaper?
He's about 75% cheaper, because when we compare the cost of using Western Union, for instance, right, all you need to pay on Dash is about 0.5% fee in total, right? Probably pay about 0.1% buying this on Coinbase, about another 0.1% getting the fiat into Coinbase, right? Then sending the Dash completely free with instant send if you calculate the fee. Then changing it to fiat on Niger Crypto, another 0.1%. So you might just end up spending 5% of 1% on fees, which is about 0.5%. In which, if you're using the traditional mechanisms, you might end up spending 10%. So it's about 70 to 80% cheaper, if you look at it that way, right? If not way more, like over close to 100% cheaper in some cases. If you look at some other remittance mechanisms, like what they call those guys? I don't remember their names. Like the alternative to Western Unions, MoneyGram, yes.
MoneyGram, Western Union, all those things.
Yeah, so it's just way cheaper.
You have plans to expand throughout the Caribbean and other.
Oh my God, like Africa and the Caribbean are our primary market. So we use Haiti as sort of like like a proof of intent to show our intent in the Caribbean, right? And we were able to get good partnerships to launch that in Caribbean. In fact, as I'm speaking to you, although I cannot disclose much more, right? But we have plans in 2 to 3 other countries in Latin America, right? And we also have plans 7 countries within Africa, right? And 1 country in the Middle East. So these are the plans what we're trying to achieve before Q2 2022, right?
And,
So exactly.
and for all of those, are you leveraging Dash or are you leveraging other potential stable coins?
Like for the ATO, it's not just Dash. You could also use stable coins, right? You could
Okay,
use USDT, you could use the USD, right? You understand? So, but of course, Dash is Dash is a facilitator here, so they are sort of like giving like fee breaks for
okay,
like sort of like a cashback if you use Dash, of course,
of
right?
course.
But basically, we're going to be utilizing a lot of cryptocurrencies, like a lot of stable coins in this space, right? And if the central bank's digital currencies, if their APIs are going to be open for integration and all that, we're still going to leverage that, right? But for now, we're going to make use of the existing stable coins, right? And try to push this within particular jurisdictions to make remittances easy, right? And we are also launching a new app. We disabled our app for about 3 months. We've been working on a brand new app both on Android and iOS. So we'll be launching our app by this week, right? And we'll be launching more protocols within the exchange. We'll also be able to list tokens in the BSC, which is the Binance Smart Chain, Waves, and also TRC, the Tron chain. And basically, like a lot going on the coming weeks, the coming months are crazy. We've been building, expand. We've expanded our tech team, and right now we want to do more marketing because sincerely, we've not done so much marketing with Niger Crypto. Yeah, of course, there is the funds issue, but we want to do more marketing on our products so that people can actually have an idea of what we're doing. Mm.
I've said it from the jump. I think you're doing amazing work. I'm extremely happy for you. I love the growth yeah. So I'm happy that you're able to be on the show. Those that don't know about Niger Crypto, definitely look it up. Really interesting stuff that Chiagozie and his team are working on. So as always, I thank you very much for being a guest. I always love when you come because we get to dive into some blockchain related topics. So, and your expertise is always welcome. Thank you. And, obviously stay on so we can connect behind the scenes. And to everyone else, thank you very much for tuning into another episode of the Tech Behind FinTech. We'll be back next week at 12 p.m. EST, our current our time that we go live every Friday, 12 p.m. EST. So once again, thank you very much. Have a happy Friday. Have a happy weekend. We are out. Cheers.